Good afternoon. My name is Campbell McCreary. I'm a Vice President of Capital Markets at Amvest Capital in New York. Welcome to the Amvest Capital Inc. live webinar with Integra Resources Corp. Integra trades on the TSX Venture as ITR and on the OTCQX as IRRZF or ZF. We hope you'll enjoy today's program. We'll also be available in replay mode. Feel free to chat in your questions in the question pane of the GoToWebinar control panel or simply email them in. Try and ask the questions in real time or after the webinar. Amvest Capital is a New York-based investment management and investment corporate finance firm focused solely on the natural resource sector. This call is hosted and recorded by Amvest Capital Inc. Refer to this disclaimer. Call is for informational purposes only. We have with us today George Salamis. I'm going to make you presenter, George. Please share your screen and put up your webcam. Geologist by background, George has over 30 years of experience in the mining and resource exploration industry, has been involved in over $2 billion of M&A transactions, either through asset sales or his involvement with junior mining companies. George was most recently executive chairman of Integra Gold, which was sold to Eldorado Gold for $590 million Canadian. He has discovered, financed, built, and managed and sold more than 5 major mineral deposits around the world. Following the formal presentation, members of Amvest Capital will ask questions of management. We also look forward to any questions that you would send in. Find your way to the question feature on the GoToWebinar control panel, and we'll incorporate your question into the live session. How are you doing, George? Good afternoon.
I'm doing great, Campbell. Thanks very much, and thanks to Amvest Capital and the friends of Amvest Capital. It's great to be here this afternoon. So I'm gonna, sorry.
Go ahead, we're good.
No, I'm gonna get going. If you can see that presentation slide.
Yep.
And so yeah, just kind of setting the stage on the company and what's happening. And I think really the best place to start with all of this is to kind of set the stage of where we're at in the cycle. And, you know, I've been in this business for over 30 years now, working for major mining companies for 2/3 of my career, and then the wild west of junior mining for the remaining third. And I've never seen a setup for a gold market like this one. It's incredible, and it's got wings for sure. But I think just to kind of couch where Delamar is and where Integra is right now, you really have to kind of look at what's been going on in the business in the last sort of seven or 8 years. And to start there is, you know, let's look at what's been going on and with the major gold producers. First off, I mean, there's been a lot of belt tightening that's been going on in the hands of the majors. They've been increasing their margins, reducing costs. That's great. They'll probably be making tons of money by the end of the year. They'll have cleared out all their debt, and that's all great. But, you know, in the process of doing all that, our view certainly is that there's been two things that have really happened that have been important to we, the holders of big gold resource assets. And the first thing is high grading. Obviously, there's been a lot of high grading of assets done by all the gold producers, basically going for the best of the best parts of their reserves to increase profitability. And that tends to sterilize remaining resources and make them unminable in the end of the day, as a general rule. The second important piece is exploration. I mean, the gold producers, the majors, the mid-tiers, and the junior producers have not been doing a lot of exploration, so relying solely on companies like Integra to do that. And so what we believe is going to happen sort of into the balance of this year and into next year is, flushed with cash, these mining companies will then start to look at what's in their own pipelines of projects to develop, and you know, their pipelines are bare. We all know that. So that's the kind of the niche that the advanced developer of projects, which Integra is, really sort of fits into. And just to kind of also set the stage on scarcity. Scarcity is a really big aspect of the way we look at projects and the way we look at this project. And so we had another bank do a bit of a project screen for us. We had them look at all of the projects around the world that have resource estimates, and it turns out that there are 3,500 of those. Really amazing thing happens when you start to apply different screens onto this big number of gold assets around the world. Like remove all the projects that don't have a valid economic study in the last 5 years, skip down the list, remove all the projects with a mine life of less than 10 years, remove all the projects that are not in tier 1 jurisdictions, i.e. the best places in the world to develop, Canada, US, Australia, etc. As you get down that list, finally remove those projects that are going to cost a ton of money to build, over $500 billion of capital, $500 million of capital rather, or greater. And then once you get down to that list, according to this bank, there are 4 projects that are left over in tier 1 jurisdictions, and we're one of them. So we feel that we're in a really privileged position in that respect, and I cannot overemphasize the fact that deposits like this, really big ones in tier 1 jurisdictions, are really rare. So just to look at where we sat when we acquired this asset 3 years ago from Kinross versus today. We acquired the asset from Kinross. There was no declared resource. Today, we've got 3.9 million ounces of gold equivalent resource in an M&I category, so hugely de-risked on that basis, and a further 500,000 ounces of inferred, so 4.5 million ounces of total resource there. So really big, and we think it's going to get bigger. We know a lot more about the metallurgy today. We know that the bulk of the mineralization out at Delamar, situated in southwestern Idaho, is open pittable, is heap leachable with a small milling component. We know that. We've done a lot of work. And we also know the potential economics of the project. We did this great PEA, which we launched last year, which has a really compelling story in terms of economic returns, using the old gold price. And it's kind of unimaginable to think that that's the old gold price. 1350 wasn't so long ago. The NPV5 of this project was about $350 million US dollars, IRR of 43% after tax. So really compelling economics, and of a scale of a project that we ourselves could finance and build, and that was really important for us. Along the way, we've made a lot of new discoveries on various fronts, increased the land position around this area of southwestern Idaho. We also did a lot in terms of adding to our institutional registry of shareholders. I would argue that we have one of the best rosters of blue chip institutions who own us. And in addition, Corp Mining, the mid-tier gold silver producer, largely focused on the US and Mexico, is a shareholder as well. And we've got, as of today, $26 million in the treasury. So we're in a really excellent position to move this asset forward. In terms of the capitalization balance sheet, we're currently trading at just over $5 a share, 47.8 million shares outstanding, no warrants, no warrant position overhanging. So basic market cap of about $450 million. And as I mentioned earlier, $26 million in the treasury, really great position to be in. So here's what we know about Delamar. It's got everything, all the key ingredients that it takes to make a really robust mining operation, a low-cost mining operation. Second thing that we know for a fact is we've expanded the exploration footprint, if you will, of this project on not just one front, but various fronts. And we do believe that this project is going to get a lot bigger than 4.5 million ounces. Here's a snapshot of the PEA. And that PEA, I should say, only tackles less than half of the resource. What was really important for us in doing this PEA was we wanted to show our investors that out of the gate, we could demonstrate a project that was capital intensity of an order of magnitude that we could afford to finance and build, and of a scale that we could afford to finance and build. Really, really important for us. And so, the capital required to build a project that's going to produce 124,000 ounces of gold equivalent per year, most of that is gold revenue, by the way, comes in at about 160 million US dollars. And the economics are really, really good at 1350 gold. So at current gold prices, obviously even better. 43% after tax IRR. Really, the economics of this project are driven by two things. One, the low capital intensity to build this project, and two, the really low cost of production, the all-in sustaining cost of $742 of gold equivalent per ounce. So there's an interesting part in this construct of a PEA. Most of our production comes out of heap leaching, 28,000 tons per day. There is a small milling component in this study, which is quite interesting. That small milling component is 2,000 tons per day, and it's designed to handle or tackle or process low-grade sulfide mineralization from one of the two deposits, Florida Mountain. The feed rate or the feed grade to that small mill is about 1 gram per ton. Now, really interesting thing occurred last year in terms of our exploration. And so our hit rate on what I'm going to call high-grade gold that's, 8, 10, 15, 20 grams per ton, started to increase as we were exploring these various fronts. And so we're starting to imagine what could life look like if we are all of a sudden to start looking at processing that high-grade style of resource through a mill that's designed to take on low grade, and literally displacing half of that throughput through that mill with not 1 gram per ton, but 8 to 10 grams per ton, let's say. And we've done the calculations so that basically that mill becomes a license to print money. It's stellar. So hence the change in focus here in terms of exploration, which is what I'm going to be showing you in a couple of slides. Everything starts with our mineral resource estimate, as I mentioned earlier, hugely de-risked with a 90% M&I resource, 3.9 million ounces of gold equivalent. And, we understand a whole lot about how these different forms of mineralization, how they process, how we can heap leach them or mill them. Really important starting point for us. We get asked the question a lot, what does the project look like at current gold and silver prices? So that yellow band that you see there is the economics of the PEA at the time of the PEA, but start to look at $1,600, $1,700 gold, and then you're looking at NPV 5s in US dollars of up to $600 million, and after-tax IRRs north of 60%. So a robust project that's going to get even more robust, obviously, with higher gold prices. Campbell, at this point, if you don't mind, I'm going to get you to switch to the video.
Okay. Give me a moment. It's up.
Okay, great. Is it running? I can't see it.
Yes.
Oh, here we go. All right. So, this is a view of the project, basically where it sits in southwestern Idaho. That orange blob in the top is Boise. That orange line coming off of it is the interstate. Circling the two deposits there, Delamar in Florida. War Eagle is the third resource front, very high grade. We'll be talking about that in a second as being a potential front for other high grade mineralization. And then there's Black Sheep, that area northwest of Delamar, where we think we've got another Delamar lookalike, another potential for 3 million ounce deposit in that neck of the woods. In this area, we'll be doing, in this entire area over the course of time, we'll be doing 16,000 meters. Those yellow lines that you see coming in there, those are power lines. So we've got lots of infrastructure in the area. We've got access to water, etc. So we're going to jump now to Florida Mountain. Logical place to start because Florida Mountain is where we start production per the PEA, but we're also exploring there right now. There's the north arrow pointing north, so this is a north-south trending ridge. The top of the resource estimate, 1.1 million ounces, and there's the bottom of the resource estimate coming in right there. From end to end, that's about 1.5 kilometers of strike length. So it's got a pretty sizable footprint to it right now. So an interesting thing happened last year when we started doing metallurgical drilling, essentially drilling fences of drill holes over top of this deposit. You can see those lines, those fences coming in. We are collecting metallurgical samples basically for PEA purposes in future pre-feas studies. And we started to intercept these really amazing high grades in the course of collecting these samples. 1.5 meters going 8 to 20 grams up to sometimes 5 meters, same grades. Really interesting, and first time where we've seen this sort of evidence of mineralization coming right to surface. So those are the hits that we started to get that are being drawn in white, allowing us to connect the dots, if you will, on these vein zones. Quite amazing. And what we've concluded is that there's really 7 of these very high-grade vein zones that are what we call these plunging shoots of mineralization. Interesting thing is, from the historical records, we know that the old timers mined a lot of gold deeper into the mountain, literally underneath. 15 gram per ton cutoff, 30 gram per ton average grade, 1 ounce per ton essentially. So really, really high grades. And you see these piles of dirt that you see there that are being highlighted. Those are the access points that the old timers used to basically tunnel into the side of the mountain and mine these veins on various levels. Really, really interesting stuff, interesting history, but also provides a bit of a guide work for us in terms of exploration of what could be there, what has literally not been explored with a modern day drill program ever. And you can see that these added access points dot the countryside. So there's the lowest one up in the upper left. And if you consider that if that's the lowest level, we know that the old timers mined, practically speaking, to the top of the hill. That covers a distance of 400 meters, roughly speaking, about 1,200 feet. So this is a quite vertically extensive vein system, high-grade vein system. And again, really hasn't been explored. In fact, we know a fair bit about what happens between those 2 orange lines there, because it's been pretty extensively drilled. However, below that lower orange line, we don't know much. We've got a handful of drill holes and they all show high grade. And so this is the target for us right now. What's underneath the ore deposit there that we've defined? What high grade veins could connect up to with what the old timers were focused on back in the day? So we're jumping now to the 2 deposits. On the left-hand side is Delamar, that's 3.3 million ounces. On the right-hand side is Florida Mountain, that's 1.1 million ounces. And you can see they're connected by a haulage road, which was used by Kinross back in the day. And that's still there, so there's still a lot of infrastructure on site that can be used. So zooming in just now for a moment on Florida specifically. And so there's Florida. There's that same deposit that I showed you in that drone view earlier. Just for reference, that red mineralization that you see there, that's the oxide mineralization, heap leachable. The green is the transition mineralization, also heap leachable, per the studies that we've done up to now. Really great recoveries, by the way, from that, the test work that we've done. Looking underneath the hood of this deposit and focusing in on what's underneath it. That blue is the sulfide mineralization at below Florida Mountain that gets processed essentially in the mill scenario. That's about 1 gram per ton of sulfide that concentrates quite well. But for the first time, we're having a look at those zones, those black panels, if you see there. That's the remnants of mined out stopes that were mined in one vein in particular. That being the trade dollar blackjack, and about 250,000 ounces was taken out of that one vein. Very high grade, that, as I mentioned earlier. We know that there are 7 of these veins in parallel. So that for us becomes the valid target to look at potentially putting together a high grade resource under an existing 1.1 million ounce open pit, and maybe displacing some of the low grade sulfide that was destined for the milling scenario. Yeah, those stopes from back in the day were better than 15 grams per ton. So quite high grade and quite a high grade target. The next view that we're going to look at is essentially the same. However, we've stripped the topography away. And so what we're looking at is basically due northwest. Those are the fences of holes that are coming in there that are being drawn in, and those vein zones that basically rip almost north-south from end to end on the deposit. I hope we can get in a zoom on this. You can see some individual grades that we intersected in just the top layer, the top 100 meters of these veins. Spectacular grades, 18.5 grams per ton, 850 grams per ton silver, these aren't assays, these aren't results that you get every day. So quite an interesting, compelling target that's starting to develop here that we're drilling on as of today. And so what I'm going to show you next is a bird's eye view of what we're looking at drilling as a target. What you're looking at right now is the 1.1 million ounces of resource at Florida Mountain. That's pit constrained, so that gray that you see around the deposit is the open pit at 1350 gold. It's got a 1-to-1 strip ratio, quite low. And what we're pointing out here are the various vein zones that we know exist. We know that they exist because they come to the surface. We also know that they exist because there's an extensive historical record of those veins being mined at depth. And so as we rotate the deposit and look at it straight down the guts of the deposit now, we're looking straight north on the deposit. And I'm going to show you exactly what we're targeting. So what we can draw in for you here is the top of the resource, and from the southern end, what the bottom of the resource looks like. Basically, it's where that green stops. And so that layer is about 120 meters, call it just over 300 feet. Pretty well drilled within the context of that deposit. We know a fair bit about what's going on up there. However, below that, we don't have a lot of drill information. We know that the old timers mine these high-grade veins, but we really haven't drilled them. So that becomes the target for us as of today. And in fact, we have one drill rig set up there now, a second one to arrive in 4 days to join the effort. But we're essentially drilling holes from surface down underneath the deposit to see what's there, essentially going after those high-grade veins that we know were mined previously, over the course of time in the late 1800s. And we know that there's potential for very, very good high grade at those depths. So, time will tell whether that'll pan out. We're very, very confident given what we've seen thus far. And we've got about 5,000 to 7,000 meters of drilling to be done there at Florida. Now, the second way to look at this target is the following. So one of the things that we did early on is we ran what's called soil geochemical surveys over the top of this entire area. We did more soil geochem sampling than anybody's done in this area ever. And in an effort to characterize what does the geochemical footprint of this deposit look like relative to what we know the deposit size is. And so that blob of pink and red that you see there, and just kind of what's being drawn in right now, is the Florida Mountain 1.1 million ounce footprint of the deposit. Relative to the size of that anomaly that's associated with this deposit, that anomaly is huge, several times larger than the actual extent of the deposit that we know up to now. And I should say, beyond the limits of the deposit, really little or no drilling was ever done outside of the pit shell, let's just say. So that becomes the target for us. And you can fit, 1, 2, 3 Florida mountains within that blob of pinkish purple there. One area in particular that we're looking at that'll come up in the second, and it's dead obvious, it should be obvious to everybody who's looking at it, just immediately to the right of Florida Mountain, or that other purplish blob that you see there, that's an anomaly called Florida Keys. And the intensity of that soil geochem anomaly is as intense or even more intense than that which hosts Florida Mountain itself. Yet there's probably about 6 drill holes into that area, all came back with spectacular grades historically, and for whatever reason wasn't followed up. So that becomes a key target, probably one of my favorite targets to be tested over the course of the summer. And just kind of zooming around now, just to give you kind of a bit of a perspective on, the topography out here. If we were to look at a much larger production scenario relative to this mountain, that strip ratio wouldn't change because the topography works, and it works extremely well in the course of potential mining in the future. There's the Florida Keys deposit. Again, a very, very strong soil geochem gold response in that area, untested, wide open. We're really, really excited to be drilling that this summer. And again, this is the topographical aspect of the area, that massive anomaly that covers that area, and a different angle on how much bigger that deposit could actually get once we start stepping out away from its limits. So we're just kind of spinning it around. The next area that we're going to jump to is, I believe, Black Sheep. And so Black Sheep is an area situated northwest of Delamar. So that second large, big purplish blob is Delamar. That's 3.3 million ounces. We had two specialists come in, Dick Silito and Jeff Inquist, and these are people alongside our VPX, who's one of the best in the business. And we asked the three of them, where's the best place to look for another one of these? And they all three of them categorically said this area in this box, which we call Black Sheep. And so we did airborne studies in this area over the course of the last year and a half. We did soil geochem over the course of the last year and a half. And what we noticed is this area from an anomaly perspective is lighting up as well as everything else. In fact, from a geophysical perspective, something you don't see on this image, the geophysics for this area are far surpassed anything that we've seen anywhere else, even Delamar down to the southeast where you see there. So there's a connection between these deposits, and we think that part of the connection is up to the northwest in this area called Black Sheep. So that's an area where we'll be starting about 3,000 meters of drilling starting probably this September, maybe into October. Really excited. Our geologists are really excited to get into this area. It's got all the hallmarks of Delamar, yet it's never been drilled. Might just skip over that one and jump to the third target, a really, really high-grade target. And again, you'll see this theme of closeology. Everything that we have, that we're exploring is close. And from a mining perspective, that's really important. It means that you can start thinking about shared infrastructure. On the left-hand side, Florida Mountain, we've been talking about that, where that arrow is. And this next area is War Eagle. War Eagle is an extremely high-grade gold deposit. No resource on it yet, but I'll show you why potentially we could get there quicker. About 5 kilometers separates the two, so about 3.5 miles. And as I mentioned, very, very high-grade gold. So interesting thing as a starting point, previous company put down about 40 holes back in the 1980s into this area and came up with some spectacular results, some spectacular high grade over really good widths, sort of 20 to 30 meter odd widths. If we zoom in on that screen there, we can see 28.9 meters of 9.8 grams, 110 grams silver. So great starting point for us. There's some information that we know. We know the geometries. We know it's high grade. What else could be there? And so we said to ourselves, okay, let's start to look at stepping out on these zones. What else could be there? And so we initiated a drill program late last year, and we put out probably our best results to date on this project of any of the projects in terms of grades and widths. I think those will be coming up right now. Yeah, as you can see there, that's one of our sections. That's 10.8 grams gold, 115 grams silver over 34 meters. And so that's a really, really good intercept. And you can see, what makes up that intercept. There are some grades that go up to 73 grams per ton, 800 grams silver, that sort of thing. So it gives you a sense for, wow, this is really high grade. We're looking at an area that is on strike from where some of the highest grade was mined in the state back in the day. What else could be there? What we're seeing there is a zone that's starting to take shape. It might be up to 20 meters in thickness, judging by what we've intercepted, by what was intersected previously. This summer, we're going to see how big it's going to get. And so we've got another 5,000 to 7,000 meters of drilling that's planned for this area in step outs. And what we think is going on there, a number of plunging high grade shoots that our view, given the topography that's out there, probably fairly easy to develop on. And again, just to kind of summarize the method to the madness here, why are we doing all this? Why are we looking for all this high grade outboard of this tremendous low grade deposit? Well, it's all about closology, and this PEA contemplates a means of processing not only heap leaching but milling, that we can then start to talk about feeding higher grade material to a centralized milling facility, you know, right where that arrow ends. These are not long distances to be trucking high grade ore at the end of the day. So we're talking about potentially accessing multiple fronts of mineralization in a production scenario that currently looks at 125,000 ounces per annum, which is really good, but potentially going well beyond that in future studies. And that's really important. You can see some of the infrastructural aspects there. There's a lot of infrastructure there that's already there. But that's basically the model, sort of a hub and spoke model, if you will, of what's going on out there. Campbell, I might get you to switch off. There we go. So back to the presentation. So question that we get often, what's it like exploring in Idaho? You know, we've been there for just 3 years, but, you know, coming out of Quebec, I have to say Idaho has been just as welcoming, just as mining friendly. You know, the state officials, all the way up to the governor level, you know, they'll go out and they'll market with us. We've been marketing with them in Chicago, New York, Vancouver, and Toronto. And, you know, that's gone extremely well. So we've got a really, really mining friendly jurisdiction, if you will, that's backing us. This is a state with a lot of mining history to it. It was founded on gold and silver mining back in the day. And there is some activity there now. Obviously, Hecla and others are producing gold out of the state. But, you know, really our effort is to kind of restore the glory of Idaho mining, if you will, because it is a mineral rich jurisdiction. From a permitting perspective, this is a snapshot of what we thought the permitting would look like as of last year. We think that there's scope to shorten this permitting timeline, but basically we've got the series of steps to jump through. We're at that baseline study mode right now, which then submits into what's called the plan of operations in conjunction with our feasibility study, which is coming next year, second half. That goes to completeness review, EIS, and then a record of decision. 48 to 60 months is the estimated timeline. We think that there's scope to shave down significantly. So, you know, maybe more on that later on this year. But that's the situation. In terms of the permitting landscape, because our resources, both Florida and Delamar, sit on what's called patented ground, which means essentially that we own the surface rights and the subsurface rights, and these are rights that have been grandfathered that go back in time, you know, 100 plus years. The permitting of the extraction of the resources from those areas tends to not be laborious. You tend to be dealing with the state mostly with respect to the permitting in those areas, and dealing with the state obviously fairly straightforward. In terms of where some of our infrastructure is, the heap leach, the mill, et cetera, that's going to be on BLM land. And again, there's a well-documented process to going through that. We don't have any the big rivers. We're not near any national forests. The closest, you know, community to us sits, you know, about 20 miles to the west of us. It's well out of the way. So we think that the permitting situation is going to be fairly straightforward because of all of those things. Board and management, as Campbell mentioned earlier, it's the same team that brought you Integra Gold and the takeover by Eldorado. One new addition I'd like to sort of focus your attention on is in the board of directors, Butch Otter. Butch joined us in September of last year. Butch is a two-term governor in Idaho, easily the most recognizable figure in Idaho. He served one term as a senator in Washington. Butch has been a phenomenal help to us thus far in terms of opening those doors in the state for people that we need to talk to for permits, and he'll continue to perform that function. All these other directors, I have to say, have all been phenomenal to work with. They all have their own areas of expertise, from finance to technical to you know, company management. So they're all rock stars in my book. So just to summarize the plan for this year, lots of news flow from here to the end of the year, 16,000 meters of exploration, 7,000 meters of metallurgical drilling, lots more de-risking studies that go on in the background that will lead to a pre-feasibility study in the second half of next year. And last but not least, the social engagement aspect, which is, as you all know, super critical. At Integra Gold, we started that process really early on, and we are really of the belief that you can never start that process too early. So we've started dialoguing with our stakeholders, and so far we've had more experience, nothing but support on that end from the primary stakeholders in that part of southwestern Idaho. So on that note, happy to open up the floor to questions.
Sure.
Campbell, over to you.
Sure. Thank you. Just to clarify, Integra is 4 to 5 years away from being fully permitted. Is that correct? And how long do you estimate to being shovel ready from today? Just to recap.
So currently, if you, my own opinion would be, so we're 48 months away from to get through the permitting exercise. Let's just say. So that's what is that? That's 3.5 years. Construction, in order to get into production, the PA contemplates a phased, gradual buildup of the production from the open pitting and heap leaching. So we actually get into cash flow in the first year of the operation. So call it 4 years from today in terms of being at that stage.
And then basically the budget from PEA to PFS and amount of drilling to be done on the project in summary.
So to complete the PFS, which occurs at the end of next year, you know, probably another, if we do no further exploration, just feasibility costs alone, probably another $7 million to complete. I can't foresee us doing no exploration out there. It's just too enticing to keep growing this asset. So, you know, we'll probably raise more than that at some stage. But for now, man, we're set. Our treasury is pretty strong.
How much do you have again?
$26.5 million.
Okay, great. Thank you.
We did that raise, by the way, at $1.15 Christmas last year.
Nice.
Thanks, George, for the presentation. Just a couple questions on Kinross. Can you talk a little bit about, do they have a royalty or any acquisition terms that you'd like to discuss around Kinross?
Yeah, so part of the terms of the acquisition, part of the terms, simply put, were that Kinross would retain a 2.5% royalty just on Delamar. Florida Mountain is royalty free, which is awesome, but the Delamar deposit has a 2.5% royalty. That royalty package, some of you may recall, Mavericks, a royalty company that's relatively new but pretty aggressive, acquired all of Kinross's exploration royalty portfolio last year. I believe it was October, November. And so Mavericks are now the owner of that 2.5% royalty over just Delamar. And that royalty drops by down to 1.5% with $10 million of royalty payments. There's a drop down element to it.
Okay. And any other obligations owed to before you own, or any other obligations around the assets outside of these royalties?
The other obligation we have is a duty to protect the environment, obviously, and so because this is a mining operation that was shut down in the year 2000 in the hands of Kinross, there's an ongoing environmental maintenance, if you will. The project was completely restored from a site perspective, but there's water that needs to continually be treated, and so that's our responsibility, and we do it happily. And that's just over $1 million US annually to maintain.
Okay, got it. Okay, thank you. And any outside of the water, is any other reclamation going on the property?
No, that's all that needs to be done.
Got it. Thanks.
Thanks for the presentation, George. it's pretty fascinating stats on like one of the first slides out of S&P Market Intelligence. I haven't seen something on that presented before. And so you're saying with the product mix, you'll be producing 2 products. Most of the material you'll heap leach, and then that'll be sold in 2 different categories between the 200 ton per day mill. Is that right?
It's a 2,000 ton per day mill. So yeah, the base load, if you will, of our gold and silver production will come out of the heap leach. That 2,000 ton per day mill is designed to treat the sulfide mineralization from Florida Mountain only, not from Delamar. Delamar's got a whole bunch more of that, but we need to understand that a bit more before we can bring that into a study. But you know, you're quite right. So that 1 gram per ton sulfide material from pit bottom at Florida gets processed in the mill. So that process is, you know, it's crush, grind, flotation, regrind to 200 microns. So really not a fine grind, not a lot of, you know, energy required or specialized capability required. This is all off-the-shelf milling equipment to get us 90% plus gold recovery and an 80% plus silver recovery out of that mill. So pretty standard stuff.
Got it. And have you begun sending any kind of concentrate or end product samples to, you know, potential buyers?
So
too early.
In terms of looking at concentrate makeup and, you know, where we could potentially process that elsewhere, for Florida Mountain, we haven't done it simply because it works so well in a milling scenario. There's not much you need to do to it to get a really good gold silver recovery. Some elements of the Delamar deposit don't behave that way, not all, but just some. And so we've looked at concentrate shipping potential for some of those ores at Delamar, and we have sent concentrates around gold and silver from Delamar. Again, Florida is a dream, but Delamar slightly more complex.
Got it. Thank you.
So obviously you're designing and developing this to bring into production yourselves, unless you were to be taken out along the way. Can you tell us a little bit about your thoughts on the appetite for a deposit of your size in Idaho? Where do you think it might fit in that kind of U.S. chess game of, you know, your previous Integra was a Canada play. So what's different in the U.S. and Idaho?
Well, maybe to answer that question, maybe going back to Integra Gold. So the playbook that we were following there, very, very similar to what we're doing down in southwestern Idaho at Delamar. So Integra Gold in Quebec, we had an asset that was large, an awesome asset that we acquired for not a lot of money. Got pretty lucky with the lucky and skilled. We had some very skilled people working for us, and turned this small deposit into something special. But again, similar flavor in that that was a deposit that we had the means to finance and build ourselves because it wasn't going to cost a lot of money to do that. And so in that case, we bought a bankrupt mill out of bankruptcy for not a lot of money, and we were really poised to develop that deposit. In fact, we were underground. We had quite a mining workforce already hired and working for us underground when that takeover offer came. That was too difficult to.
What year was that?
That was 3 years ago. We have to remember that was only
not the best market. Yeah,
not the best market. But we know we were poised to build that asset, and you know, that to us is another merit of Delamar. This is an asset that we don't need to kind of sit around and wait for somebody to acquire us. We can build this and scale it up ourselves, which is great because it gives you and your shareholders that optionality, right? We can build this ourselves, or we can on-sell it. In terms of what a deposit like this could look like in the hands of somebody else, you know, 125,000 ounces a year production, maybe going to 200,000 or more, that starts to become quite attractive to the mid-tier producers, right? And maybe even larger. Again, as I mentioned earlier on in the presentation, there are not many of these around in that what'd you call it, chessboard of the US.
Mm-hmm.
And so, yeah, it definitely will be an attraction.
That's nice. Two quick questions. Application to trade on a NYSE, or just any uplisting intentions?
Yeah, so I should have kind of mentioned that earlier on. So our shareholders would have seen about a week, just over a week, maybe 10 days ago, we announced our intention to uplist onto the NYSE exchange, and obviously have done a lot of that paperwork to get there. We're awaiting final approval for that. Shouldn't be long. I can't give any guidance as to when that may occur, but in doing that, as I stated in that press release, we're responding to demand from U.S. shareholders, U.S. retail, for example. It's a story that's made for the U.S. because it is in the U.S. It's part of the history of the U.S. Yet, up until recently, it was tough for average retail buyers to access this stock, and following the NYSE listing, it will no longer be so.
Excellent. And then quickly, can the royalty be bought down before royalty payments amortize it?
Possibly in the future, but that's a negotiation to be had.
Got it. Thank you.
Just to get this out of the way, George. Oh, sorry. So, you want to go?
No, it's all good. You're good.
Okay. Okay. To get this out of the way, so you mentioned you raised money Christmas last year. That was $1.15, and that was pre-consolidation, 1 for 2.5.
That was pre-consolidation, correct?
So the equivalent price would be somewhere like $2.80, $2.90 today.
Correct. That's right.
Okay. Okay. Just wanted to get that clear. Okay. So we have DeLamar, Florida Mountain, and Hub and Spoke. Both assets have slightly different characteristics in terms of, I guess, mineralogy. Are you going to go straight to Doré, and then sort of, can you give us a bit of a flavor on metallurgy around the two assets, how you plan on kind of integrating them into this hub and spoke approach?
Yeah, sure. So just kind of starting off with brass tacks of metallurgy, and again, probably the most important part of a project, certainly from my experience, is project live and die. Not in the pit, but at the mill or on the heap leach. And so we spent a lot of time studying both deposits from a metallurgical perspective, because we're looking at this deposit as a heap leach. So we took that wealth of data that we inherited through the transaction with Kinross, 250,000 meters of drill holes out there, roughly speaking, of what is it, close to 3,000 drill holes in total. And we looked at that, and then we drilled our own holes, studied those to get a sense of the leachability, if you will, of the two top horizons. And starting at Florida, because that's essentially where we start our production life, what we noticed from the leachability or the leach characteristics from that area, they were phenomenal. So in some of the columns we were getting, of the up to 90% gold recovery in the columns that we were getting from Florida oxide and transitional material, we were getting 73% of the 90% in the first 3 days of leaching. So this stuff leaches super quick, especially the gold. Silver, not so much, but that's just the way silver behaves in all heap leaches, not most, but all, I'd have to say. But the silver eventually comes out for a low 40% recovery. In the mill, which is designed for Florida Mountain's sulfide, I described that earlier, the recoveries out of that mill are quite good, upwards of 90% gold and upwards of 8% silver. DeLamar, similar leach characteristics, slightly less, maybe 5% or so, less than that, but equally as amenable to heap leaching. And again, a very, very quick leach profile out of the DeLamar ores as well. Obviously, we've got lots more study work to do because we're going to feasibility, but that's what we know today of the metallurgy. So really great recoveries as a heap leach. Florida Mountain, really good recoveries as a milling situation.
And is DeLamar the one that has a little bit of base metal involvement in there too? No.
Yeah, no base metals in either deposit, and we haven't seen any in the historical record either in those two deposits. Not of any kind of economic significance nor metallurgical consequence, I might add.
Yeah. Are you seeing that in the drilling at depth or anything like that?
So far,
No.
not. No.
Okay.
No.
Okay. Great.
So pretty big drill program coming up in terms of meters. Question we had in was, can you talk about the costs, the drilling costs, say, you're experiencing versus what people might be getting in Nevada?
So I'm a director of a Nevada-based explorer. I've got friends who work in Nevada. We compare drill costs constantly, and they're on the mark. They're identical. So from a diamond drilling perspective, we're looking at all-in costs, and that includes assaying, mobilization, the whole 9 yards, of about $300 US a meter. For RC, just under $200 a meter, and again, all in. So that's the cost, and I would love to say we could drill for cheaper, but that's just the state of play in the Western US. You just have to pinch your nose and move forward.
Yeah, fair enough. And then in terms of the breakdown of, kind of infill drilling, resource expansion versus kind of greenfields prospects, how would you break up the meters into those categories?
Yeah, so that's the beauty of this year's drill program, is that 16,000 plus meters that we have scheduled for this year. That's 100% exploration. We've drilled, what did we drill? Close to 30,000 meters last year, 25 the year before that. About 60 to 70% of that past drilling was infill drilling, basically confirmatory drilling. So no big expectation of finding, a big additional ore body and doing that. This year's exploration, that's why it's so exciting. It's all being done outside of the resource boundaries, and hopefully we add ounces. In fact, fairly confident that we will in doing so.
That's exciting. And how many rigs do you think you'd have going at once?
So we've got 2 rigs now, a 3rd rig to be added at the end of the month that will be moving to War Eagle, and maybe scope to add another one for the balance of the year. But so far, we have planned for 3 rigs right now.
Yeah, got it. And in terms of if you found like any new zones you want to focus on and adjust your program, is it easy to get, exploration drilling permits put through the state?
Yeah, so I mean the beauty of certainly the areas around the resource, they're all, we have a plan of operations that's approved, that we can work in. So permitting drilling within those areas is fairly straightforward. Outside of those areas, we're either dealing with the state on state leases, or we're dealing with the BLM. The state's been super easy to deal with. The BLM has been super easy to deal with. We haven't experienced any permitting delays thus far. Relatively speaking, we can move a lot around within our existing plan of operations and drill targets that might be, as of yet, not currently contemplated. Pretty easy.
Perfect, thanks.
Welcome.
George, just kind of, again, sort of summarizing, water, power, infrastructure, road, how does it compare to what you've seen in your career? Anything that's a little less or more?
Oh man.
As a component. You have too much, you probably have too much water, not enough water. How expensive is electricity, or how far are you from the thruway?
Yeah, so again, best of all worlds, I think, where we sit in Delamar right now. So an hour and 45-minute drive from Boise to site. Most of that's along an interstate, and then secondary road for 20 odd minutes to get into site. So dead easy, and that road's open 24/7, 365. So great from that perspective. And in terms of power, because there was an existing mining operation, or there was a mining operation there for 20 years, those power lines are still in place. Per the PEA, we'll have to upgrade those power lines, and I think we've got a $20 million allocation for that in the PEA, but they will need to be upgraded to support our future, potential processing needs. So that covers off on power. From a water perspective, on our concession, we own water rights to probably about 2/3 of what we need for future, processing capacity. We'll have to buy another third over the course of time. Those are the three kind of main things: access, power, water, that you need for
You got it
success.
covered. And then always like to ask, how far is the nearest Walmart from site?
Nearest Walmart would be in Marsing, about an hour away.
Right. And that tie into, where would the workers reside?
Yeah, so interesting, because we've been getting this question more and more, and it kind of speaks to the economic benefits for this area that this asset is going to, or this mine, when built, is going to bring. And bear in mind, I haven't talked a lot about this, but the county that this project resides in, Owyhee County, is I believe it's either the third or the fourth largest county in the lower 48, yet only has a population of 11,000 people. So the economic benefits to this county from this mine will be extreme. So then you start to need to start thinking about, okay, where are we going to get our people? And I think probably the simplest place to look for that is look at what Kinross did when they were mining over the better part of 20 years. They most of their staff either lived in Jordan Valley, a small town about 20 minutes west of the deposit, or came from a suburb of Boise, Marsing, which is about just over an hour's drive, and they were either driving themselves or busing in and out. So I think that's probably the most logical way to process. This isn't a project that's going to require a huge camp construction of any kind. There'll be no need for that.
Okay. And could you bring in crews from Canada, or that's not a long-term solution?
There's enough talent in that neck of the woods. We're close to Nevada. We're 200 kilometers away from
Right.
Nevada. We're a 3.5-hour drive to, or less, sorry, 2-hour drive to Winnemucca, which is a hub of northern Nevada mining. So there's a great talent pool to be had. The other thing that's really amazed me since we've been in Idaho is the pool of talent in Idaho. There are some phenomenal geologists and mining engineers who live in Idaho or are from Idaho and are working elsewhere, who would love nothing more than to come, I would think, move back to their home state and work for us.
It's a beautiful place. Gabe?
Yeah, it's gorgeous. And like, I echo your comments. There's some great technical people that live out there. Do you have to deal in your mine plan, your conceptual mine plan, I guess, going forward? Do you have to deal with Forest Service at all?
To the extent that we're dealing with the Forest Service on proximity to national parks or things of that nature, no.
Okay. Can you just give us a bit of color around, and I know you mentioned before, but maybe just summarize what we can expect in terms of drilling, the balance of this year, when's it going to start, when can we expect some news coming out, how deep you're going to go? Just some highlights there, please.
Yeah, sure. So on the exploration front, we basically started up the campaign, it would have been about 8 to 10 weeks ago. And that'll continue through the balance of the year. So, these 3 drill rigs will essentially be in operation until December, 16,000 meters to go there. In terms of the depth that we're going to be looking at, it just depends on the target. Like, for example, those holes that I showed earlier on that are testing the down dip extents of those extremely high grade veins. On average, we'll be looking vertical from surface, maybe 300 to 400 meters down. So not all that deep, but again, there's no drill information, so we don't have to go that deep out of the gate. War Eagle a bit less because it's a bit more of a shallow target, maybe 200 to 300 meters depth. And then Black Sheep, because this is an area that doesn't have much drilling and is basically a virgin area with all this massive potential. Those will be pretty shallow holes, probably looking down 100 to 200 meters depth. So it's a bit of a mixed bag.
Okay. Thank you.
Great. I think we've reached the top of our hour. Actually, we're over our hour, and I want to thank everyone for tuning in. And thank you, Integra and George Salamis, President and CEO, for joining us today. And we'll be asking, queuing you for feedback. Please send it in. Write anything you want. It is really helpful for us and for the company, positive and negative and indifferent. Your comments. And George, if you wanted to just give a closing remark, and we'll see you next time.
Sure. Closing remark. In terms of things to look at next, obviously your feedback would be great. In this era of socially distanced presentations, we do this sort of thing a lot. So if anybody's got a need for what we call a verify presentation, which is a really cool 3D way of looking at these things, happy to get on a call with anybody who would like to hear more on that end. Otherwise, just go have a visit at our website, integraresources.com. We have a 3D mock-up there, and we also have all of our presentation material and our press releases there as well.
Okay, great. Thank you, everyone, and see you soon. Bye.
Thank you. Thanks, George.
Thanks, George.
Thanks.